Welcome to the StockOptionAssassin.com's free video for swing trading options. This is Eric, and in this video update, we are going to take a look at Amgen and kind of just a couple of other biotech stocks, and we're starting to see some divergences and some things that are setting up. And this is actually a pretty clean trade setup that I'm going to be looking to get into possibly next week. I do not want to jump on it today because today is Friday and I don't want to, sometimes things happen over the weekend. So I prefer to kind of start this trade next week. Plus, we need a little bit of a retracement here anyway. So the first thing I want to kind of do is show you what I have on my screens here. So I have two charts here. The left is my larger time frame. This is the weekly chart. And on my right is the daily chart. And this is more of the signal we're getting. But whenever the weekly and daily sort of are going in the same direction, then it makes your trades slightly more high probability. So that's what we're going to look at today, which is why I'm sharing this video with you guys. And I want to go through a couple things. We also have the squeeze indicator down here. We have some moving averages, and I'm using an 8 EMA, 13 EMA, 21 EMA, and a 55 EMA, and I'm using the exact same moving averages on both charts. So all the indicators are the same moving averages for both charts. The 55 EMA on the weekly chart really doesn't do much. I could probably take that off, but the smaller moving averages is kind of what I want to focus on. And right now, let's kind of take a look at the indicators. So, previously, let me zoom out just a little bit. Amgen had, you saw this kind of consolidation, and we got into a squeeze. It never actually fired, and it sort of chopped around in these levels. And then this was in February earlier this year. Amgen had a weekly squeeze that fired off, and right before that, you could see there was a daily squeeze that fired too. So what we're looking at is some confluence here, where you have a daily squeeze firing off in the context of a larger squeeze, and you can see that this Amgen trade really just kind of took off from there. And so what we're looking at now, let's look at this one first. This was sort of a choppy indication here, where August of this year, let me get over to daily, we actually had a potential squeeze that was going to fire. It looked like it was going to go up, and then it kind of fired short. So this, to me, is sort of a false signal. We had a squeeze fire short. You can see it was, it reversed pretty quick. And so what I wanted to kind of notice or point out is that when the squeeze indicator is moving down like this and you're in a squeeze, that's fine. But as soon as it starts to kind of flop back and forth and you're kind of flopping around the zero line, then it's kind of a, it's not as high probability. You're kind of looking at some choppiness. So what we're looking at right now, though, is actually a little bit of a cleaner signal that's pointing to the downside. So you can see I have a couple of trend lines on here. So a longer term trend line, a little shorter term trend line. And what's happening right now is that Amgen, the squeeze is obviously going down. We're in the 4 weeks of a squeeze. Today is Friday, so it looks like this thing is going to end the week in a squeeze. We do have a few hours for the day. If something crazy happens, maybe it'll still fire short or something, and I'll pick something up. But anyway, so you have the context of a weekly larger time frame squeeze pointing lower, and we're really close to these support levels at the 21 week EMA. But on the daily chart, as we zoom in, you can actually see that the squeeze is below zero, indicating bearishness, and we're kind of starting to roll over. We're breaking that trend line, and this daily squeeze looks to fire off. So if the daily squeeze does fire short and the weekly squeeze fires short, I'm looking for a pretty healthy decline, probably something in the area of 5 to 10%, which at this point is in the low 100s or so. And this is very similar to this trade previously, where the weekly squeeze fired off and you got a nice surge there. So this is sort of the opposite, and to me this is a relatively clean signal. So do I want to jump on these puts or whatever today? No, I don't. What I'm looking for, I'm going to go down to like an hourly chart now. This is where you want to do a signal. So you can see the hourly actually fired short. So now what we're getting is a little bit of a retracement in the hourly chart. So what I'm looking for now is any move back up into the 112 and change range. I'm going to call it 112.50. Then I would be looking to initiate some sort of short position. So this could be buying puts. It could be selling a call spread. Let's go ahead and look at the option chain for Amgen and just see what our options are. So first of all, today is Friday, Friday the 13th. Congratulations if if you're superstitious. But anyway, Friday the 13th, we have 7 days left to expiration. So I'm really not interested in doing much with December options. January options have plenty of time to do some stuff. So what I'm looking for is, what I would go for is either a small or half position of puts, something where you could buy the slightly out of the money's the 110. The better trade would be to buy the 115 puts. I would do something like a 30% stop on that one. But a possible better option, and this is what I think is probably a little better, is doing a bear call spread. At this point right now, you could sell the 115, 120 call spread for about $1 and a quarter. So where does that put us? Let's go back to a daily chart and kind of just see what that looks like on the chart. So zoom out a little bit. Let me come over here. So on a daily chart, if we sell the 115, right now we're trading at 112. And again, if we get a little bit of a retracement, you might be able to get a better price for it. But so the 115, 112, I'm going to put a line in here. We would sell the 115 and sell with our members. We usually do red because we're selling that option, right? And then we would be buying the, I'm going to duplicate this and simply move this up to the 120. And then I will edit this one. And for green, I like to put green. This is the option we are buying. And again, that would be at 120. Okay. So we would sell the 115 and buy the 120 for protection. We would end up with a net credit of about, what did we say? That was $1 and a quarter, something like that. And at that point, what we'd be looking for is if this thing fires short, then what these options would slowly go to zero over the next 30, 35 days. What we would probably do is close the position if we got a nice short fire. If we got all the way down to the 100s, we would look to close out the trade to buy it back much cheaper, or potentially if the weekly squeeze really fires, then this thing gets all the way down here, we could actually just let that expire worthless. So those are my options. Again, I don't think I'm going to take a position in this today. If you wanted to take a position today, I would recommend doing the bear call spread because it's more forgiving. For some reason, Amgen turns back around. You do have some intermediate support here around 110, 111. So this thing could simply chop around a little bit. So, but for me though, any rallies up into that 112, 113 area, I'd be selling that bear call spread and look for that to move lower. So hopefully that helps. You guys have a great weekend, and I'll see you at the next update.